All right, guys, so getting started with this particular video, first of all, I will need you to understand that the various time frames you can actually find on your chart are actually for various purposes. Okay, now once you have this mentality, you are very much good to go. Now you must understand that in terms of trading, we have various types of traders. Okay, we have long-term traders, we have short-term traders, we have intraday traders. Okay, now we have people that trade in seconds. Okay, now these different variety of traders or these different types of traders is what differentiates the various use of the time frames. Okay, that is what actually changes the various use of the time frame. Like for instance, someone that is actually into scalp trading cannot actually want to start trading with 4 hours time frame. You may not actually have any business with the 4 hours time frame, right? But at the same time, the 1 minute time frame, the 5 minutes, the 15 minutes, the 1 hour to 4 hours all have a confluence that is actually working together to help the trader make money. And we're gonna dive through the best time frame you're actually gonna be using for your forex trading. But before we get into that, I want you guys to tell yourself or tell me in the comment section which type of trader you are. Okay, if you're watching the channel for the very first time, this is Tiger Insights, Tiger Peeps, where I bring you guys updates on trading and how to make money online in this particular space. So if you're just joining us and you enjoy forex content and you enjoy contents that can actually help you in this particular forex trading journey, make sure to like this video right now and please help me subscribe. It's actually free and you're going to be getting more insightful updates from us. And on this particular channel, regular giveaway is up, so subscribe right now. You may be up for a $50 to $100 giveaway coming up on this particular channel. And we have a community of traders where we actually share trading signals, trading insights to actually help traders make a lot of money every single day. In fact, today alone, we shared a trade on our channel that went over 250 pips on gold, and we made a lot of money, over 1:5 are bagged on the channel just today alone. So don't miss out right now on getting free signals, free updates and insights to trade. Join our traders community. The link is in the description of this video. Let's get started with this video starting right now. So now, getting started with understanding the best time frame to use while trading, the best time frame to use for your analysis, I'm going to break it down as I used to. Okay, first of all, you must understand that there are 3 categories to this. Okay, and these 3 different categories, you don't use the same time frames in all. Okay, now I'm going to explain all of these different categories, and after the video and after the explanation of the 3 categories, you're now going to understand which one of the categories you fall into and which one of the time frames you should understand to use very much well. Okay, now the first category on our list right now is the swing trading. The swing trading. Okay, now if you are actually a swing trader, swing trading actually means people holding positions for a very long time. These are like big institutions, even individuals also do swing trading, holding positions for like 1 week, 2 weeks, 1 month. Okay, now I know people that have held gold trade for like 1 month and they're like a massive profit. Okay, now as a swing trader, the time frame which you actually use to trade is very much different from the other 2 categories of traders. This is very important you actually understand this. If you're actually a swing trader, you actually don't have any business with 1 minute time frame, you don't have any business with 2 minutes time frame, you don't have any business with 5 minutes time frame, you don't have any business with 10 minutes time frame, you don't have any business with 15 minutes. Okay, there's even a high possibility that you don't even have any business with 1 hour time frame. Maybe not all the time, but at least you don't have any business with 30 minutes to 45 minutes time frame. Okay, so your business actually runs from the weekly time frame to the daily time frame to the 4 hours time frame, down to maybe 2 hours or 1 hour time frame. Okay, so we're gonna look through this right now by going over to the chart and understanding this. Okay, now understanding this particular concept right now, let's go over to what I mean. Like I said, as a swing trader, you actually have business with the higher time frame, and that is where you have more of your business, and that is where every single thing you need is, right? Okay, now for swing traders, first of all, you go over to maybe the daily or the weekly time frame to actually seek your buyers. Okay, now because You are not really more of interested in tiny moves of the market, rather you are interested in the big move. That is what swing traders actually look out for. Okay, swing traders go to the chart, they actually look at the bigger picture of the market, because you are not looking at taking profit in the next 1 minute or in the next 10 minutes or in the next 2 hours or 3 hours. They are actually looking at what is the forward move of the market. Like right now, we're actually on the weekly time frame, and from the weekly time frame right now, we can actually see on pure bias around here that we are actually bullish on the market. Okay, now if I actually redress this to a very lower time frame, you are still going to understand that even as this market is appearing bullish right here, we're actually having a bearish market from the lower time frame. You can see right here, we are very much bullish right here, but if we go down to the lower time frame right now, we're going to understand that we still have a lot of bearish moves happening in this same market in the lower time frame. So as a swing trader, you have business with 1 week going down to 1 day to find your analysis, find your point of interest, find your liquidity, find your support and resistance. 1 day you check, you map, you place trades. Maybe like right here, right now, you can actually find opportunities, maybe on the trend right here to take it a buy from here down to the upside and stuff like that. Going over to 4 hours time frame, that is where your lookout is. Okay, now maybe to get everything set up for you, you can actually digress down to maybe the 2 hours and even the 1 hour time frame to actually find your entry point. Okay, so as a swing trader, you actually don't have any business with finding opportunities in 1 minute or 2 minute time frame, because you have no place right there. Now, the second category on this particular list is the intraday traders. That is the day traders. Okay, swing traders first, those ones that use the higher time frame. Okay, and as a swing trader, they said that swing trading is actually the safest form of trading. Like, a swing trader can be in profit right now for a very long time, and the profit will still be running, and a day trader will come, make profits, lose, make profit, lose, and the swing trader is still in the same trade and still in profit. Okay, because over time the pips calculated in swing trading is far way higher than what you get in intraday trade. The intraday trading is like doing it like an everyday business. You wake up every morning, you brush your teeth, you take your bath, and you go over to your PC, find trade opportunities to take trade. Okay, that is it. So the second category, like I said, is the day traders. The day traders, these are people that look out for daily opportunities, looking for their daily 10K dollars, looking for their daily 2K dollars to just get their daily money and get out on the market. Those are the people that uses the 1 hour, the 4 hours down to the 15 minutes time frame. Okay, now as a day trader, you use your 4 hours to actually find your bias. Use the 4 hours to actually find your trading direction. Okay, like heading over right now to the chart right here, I can actually come to the 4 hours time frame right now to actually find a bias. Okay, like the trade we took today on obviously I'm a day trader, you should understand that. So the trade we took today on gold, which we actually made a lot of profit, I've actually removed the PNL, this particular thing right here, the positioning right on this particular trade. I've actually removed it, right? So this one is actually a waiting trade to happen. That is why it's actually showing like this. But we took a trade from about 3336 from about right here to this particular point, and we took profit. And right now market is actually making some form of inducement and then going back up to take the next block, and we'll be taking another sell. Okay, so we took our bias from the 4 hour time frame, and from the 4 hour time frame we were able to understand that the market has actually broken out from a trend line support, and breaking out from the support, the market tested that particular support and broke the level below it, and that was why we found an opportunity to trade right below here. Now the trade may not look very closely easy on the 4 hours time frame, but if you go down to the 1 hour, you're gonna see everything looking very fresh and simple. And this was exactly where we took our trades, from right at this particular point all the way down to this point. I think we took profits at around here 312. Okay, now as an intraday trader, for me to get everything around here looking more simple and easy, I can go over down to maybe the 30 minutes time frame, or even down to maybe the 15 minutes time frame. Okay, over right here on the 15-minute time frame, I can actually see something very super cool, very super easy. As you can see, the trade that we actually have in waiting right now, we are taking it from this particular breaker block around here after this FVG, which actually makes this trade perfect and sweet to go on to. But you can see right here, we have all the bias right here showing all perfectly well, a very nice bearish trend. And that is how intraday traders find trade opportunity, because it will be very, very simple for these candles to play out, because each particular candle in the 15 minutes time frame is actually 15 minutes. So the opening and closing of one candle in 15 minutes is 15 minutes. It takes 15 minutes, but the opening and closing of one candle in 4 hours time frame actually takes 4 full hours for one particular candle to form. So that is why it takes a longer time to see formations on the higher time frame, and that is why people that are trading on higher time frame are trading for long term, not just for what we are seeing. Because it is possible that every single thing that's happened around here from this point to this point in this market may just be one candle in the 4-hour time frame, and it may just be half a candle in the daily time frame. So you need to understand how this concept works and how to go into trades on this particular concept to know what you're going to be doing if you're actually a day trader. Okay, so as a day trader, I find opportunity down way to 15 minutes time frame, and right here, as you can see, very simple, very easy. We are up waiting on this trade, which is possibly gonna be happening very, very soon. And that is how easy and simple it is to do your analysis as a day trader. From here, I can actually place my support and resistance levels right here. I can place it right here, I can place right here, I can place right here, find opportunities, take in, take out, find my demand levels from a higher time frame, go down to 15 minutes and find trading opportunities. So if you're someone that wakes up every day looking for an opportunity to trade every day, what you need is the 15 minutes time frame. You do not need 4 hours. You need 4 hours just when you wake up, 4 hours to find your bias. That is to find the direction of the market, because you're not going to be trading against the market. So once you find your direction in 4 hours, you go over to the lower time frame, like 15 minutes, to actually find your trade. Now, the next one I reach right now is actually the scalp trading. The scalp trading, these are the people that trade in between lines, like people that trade in between lines. I call them the beasts. These guys are ready to stumble in and stumble out at any time. A scalp trader can have up to 200 trades in a day. Like, it's very, very exhausting. Okay, so as a scalp trader, you actually don't have any business with 4 hours time frame, 2 hours, 3 hours, 2 hours. You don't have business there, right? Your business is actually focused in between from 30 minutes down to 1 minute time frame, even down to 1 second. People actually trade it. So, but the scalp trading of the thing is actually really not recommended by me. Some persons actually recommend. In fact, I see people processing trades like that. I see people that are very, very good in scalp trading 1 minute and making money, right? But that is not my form of trading. That is not my kind of trading. I've actually tried this scalp trading, day trading, and even the swing, and I'm sure that I'm going to be giving you guys the best recommended today. Okay, now the scalp trading is actually very, very simple. It's something you need to understand. Like right here, you see we have 15 minutes candle. As a scalp trader, you actually don't even have any business right here in 15 minutes, right? 15 minutes is just to find your bias and understand where the market is going. You'll be heading down to like 5 minutes, okay? Down to 5 minutes. As you can see, as we're going down on the screen, everything is getting down, and then getting down to maybe 1 minute time frame. This is where you're going to be drawing your charts, drawing your support and resistance levels, drawing your various doings. Like right here, right now, I can actually decide to draw demand, supply levels right here in 1 minute. Sorry about this. I will need to place this back where it is supposed to be. All right, so I can actually decide to draw various levels on this 1 minute time frame, breakouts, fake outs, and find opportunities on this particular 1 minute time frame and actually take my trades. But trust me, this is actually not recommended even as a trader, because when you try to do this and you don't have high level of expertise or technical know to do this, you may end up losing your money. So I just took my time to actually explain these different categories and for us to draw a conclusion on what is actually best for you as a starter trader or someone who is confused, to actually know what you need, to knowing the best time frame for you to analyze and trade Forex. So now, having actually understand these various categories and how it actually looks like applying on the charts. Now, the question is, what is actually the recommended time frame to analyze the market and trade? Now, that was the reason why I had to differentiate these various categories for you to first know what you are getting into. Okay. Now, if you're this kind of trader that you wake up every day and you just want to wake up, take your bath, have a relaxed morning, meditate, and then after meditating, you just have a chill, and then you go over to the charts, find trade opportunities, take your trade, and after that, you just rest for the day, sleep, wake up the next morning, and repeat the same process. Now, what you are is a day trader. Okay, you are a day trader. You're not a scalp trader. Probably you may be a scalp trader. We're getting to that, but you are a day trader. That is what it simply means. Okay, now if you're that of a day trader and you are actually more interested in, you just analyze the charts, you take a trade, right? And then you take a trade and then you watch it for a while, maybe 15, 30 minutes, 1 hour. Observe for your loss, observe for your profit, and then you wait to see what happens, right? You take profit, you take loss, and you are done. Then you are actually a day trader. And this kind of trading, you actually just need 3 time frames. First of all, you're going to be needing 4 hours. The 4 hours is actually for your bias, your directional bias, your directional forward, your 411. Okay, to understand where and how you're going to be trading, because we have what is called market structure, and to understand that market structure, that is what you need this 4 hours and higher time frame for, to understand whether the market is on uptrend or if it's on downtrend or if it is a consolidating market, so that you know the angle to trade. Then the next thing is you go over to maybe your 1 hour to still correct what you saw from the 4 hours to see if it is actually still playing in line. Right now, after that, you go over to probably your 15 minutes to actually break down the digest and find entry points. So 15 minutes are just for your entry points to entering these various trades. For me, sometimes I take my trades even straight from 1 hour, even straight from 45 minutes. But to make things more precise or more cut down, you go down to 15 minutes, 10 minutes to actually find your entry points. And that's what makes it very, very smooth. And then you watch your trade play for about 30 to 1 hour to 2 hours to 3 hours, 4 hours. And then before that, before the day runs out, your trade has played out. So if you had a loss, you had a loss. If you had profit, you had profit. That is what day trading is all about. So that is what you need if you are this kind of trader. Now, if you're that kind of trader that can just want to wake up every morning and you rush to your computer, you face your computer, like you're looking at it, you're just open, looking at it with your full eyes, and you're just ready to take any opportunity that comes your way, then you are a scalp trader. You're a scalp trader. And with that kind of trading, you don't really have a business with high time frames. Okay, from 1 hour down, you are good. Okay, you can start from 1 hour to finding your market structure from 1 hour down to 30 minutes, down to 15, down to 5 minutes. You execute in 1 minute, and you are good. Okay, you can be finding opportunities in 1 minute time frame, executing and making all the profit you want to make. And you see that you have an opportunity to make about even 50 to 100 trades a day. Okay, because in between minutes, 1 to 2 minutes, you've entered 3 trades. 1 to 2 minutes, you've entered 4 trades. Okay, and this actually works out when you are able to find your bias and direction as you trade. Okay, you can still find your support and resistance levels in the lower time frame. You can still find your points of interest, you can still find liquidities, you can still find all those opportunities in higher time frame. You can see it in the lower time frame. But the only difference is that they are more weaker in the lower time frame. They are weaker. Okay, in the higher time frame, they are stronger and you can actually clamp on it for a long time. But in the lower time frame, support and resistance break is like water. It can just do boom boom. You are out. It's fake out is everywhere. So the direction, the market can just move in snaps and then destroy setups and stuff like that. Okay, but if you're someone that is very, very precise and you have the technical know and you have enough knowledge to bombard the chart, then 1 minute, 5 minutes, 15 minutes time frame, you are good to to go. Hello, you are good to go. 1 minute, 5 minutes, 15 minutes. You can find opportunities from there down and take your trade. Now, if you're kind of trader that doesn't like stress, you're someone that is actually having other businesses running, and you're someone that can be patient enough to risk more, probably not risk more, risk less to have more, then you are a swing trader. You can hold trade for 3 days, 4 days, 1 week, 2 weeks. Okay, now you can start your analysis as this kind of a trader. You can start from 1 week. Okay, from 1 week down to daily to 4 hours. You can take entries from even 1 hour and hold as long as you can. Okay, so this is how you're going to find things very, very simple for yourself, and your ability not to mix all these things is what makes it easy for you to identify the best time frame for you to trade. You cannot be a scalp trader and you're going to be looking for opportunities in 4 hours, 1 hour, or 2 hours, and you cannot be a day trader and you want to be trading 1 minute, 1 second time frame, or you cannot be a swing trader and you are looking at whatever is happening in 1 minute, 5 minutes. It's none of your business. So you have not to mix all of this. So, but if I'm to recommend as a day trader, using the 5 to 30 minutes time frame to execute entry point is the best. Now, I've actually noticed and read a lot of traders out there, and this is obviously what everybody is using. Like I said, note day traders only. For swing traders, the higher time frame they get to use. For scalp traders, it's all your choice. So that is it for this particular video. You want more trading insights, make sure to join our trading community. Just boom, join right now. Trading insights is flying in every single moment. Join right now. Join real quick. Shalom.